Welcome back to our Crypto Corner, where we dive deep into the ever-exciting world of digital assets and blockchain technology. Today we have a compelling discussion on the horizon, one that's making waves in the crypto community: the potential impact of a US Bitcoin exchange-traded fund, ETF. We'll explore the insights provided by the esteemed crypto research firm, Galaxy Digital, and the far-reaching implications this development could have on Bitcoin's price and, by extension, on meme coins like Pepe. So, if you're intrigued by the future of cryptocurrencies, you're in the right place. Let's get started. Pepe coin has become a subject of intense scrutiny in recent times, primarily due to its price exhibiting notable fluctuations within the past 24 hours. This heightened volatility is of considerable significance and could potentially exert a far-reaching influence on the overall valuation of this cryptocurrency. Consequently, if you happen to be an enthusiast of Pepe coin or are already invested in it, it is incumbent upon you to closely monitor and stay informed about the latest developments. In order to offer a comprehensive assessment of the current standing of Pepe coin, it becomes essential to delve deeper into its recent performance. At the juncture of October 26, the value of Pepe coin is pegged at around 117 units, with 5 decimal places. What merits our attention is the remarkable surge of Pepe's price, which has witnessed an impressive ascent of 25% over the course of just one day. In conjunction with this surge, Pepe coin has managed to amass a significant 24-hour trading volume, tallying a staggering $373 million. Notably, Pepe coin's market capitalization presently eclipses $487 million, thus firmly positioning it as the 80th most valuable cryptocurrency in the expansive digital asset landscape. Nevertheless, it's vital to keep in mind that the world of cryptocurrencies is renowned for its inherent volatility, where prices can oscillate rapidly, creating an atmosphere of constant flux. Consequently, the figures provided in this report may have undergone substantial transformations by the time you read this, thereby underscoring the necessity for vigilance and real-time updates in this dynamic domain. The circulating supply of Pepe coin comprises a substantial volume of 420 trillion coins. For those contemplating entering the world of buying, selling, or trading Pepe coin, it is imperative to do so through a trustworthy and reliable platform, such as MayXC Global. By following the link provided in the video description, you not only gain access to a secure environment for your cryptocurrency endeavors but also stand a chance to accumulate up to a remarkable $99,100 in free crypto. Additionally, it is highly recommended to become a part of the channel's free Telegram group, accessible via the provided link, as it offers a valuable resource for staying updated with the latest developments in the crypto sphere. Prior to delving into the central subject of our discussion, it is essential to furnish you with the most recent developments in the cryptocurrency domain. Pepe coin, in particular, has been making waves in the market, outperforming its rival tokens such as Shiba Inu and Dogecoin, as illustrated by its impressive 49% surge in the weekly charts over the past 7 days. In stark contrast, Shiba Inu has registered a 12% increase in its value during this timeframe, while Dogecoin, another notable competitor, has rallied by 12.4%. The growth trajectory of Pepe coin does not stop at the weekly charts, it has also maintained a consistent upward trajectory over the last 14 days, with an uptick of 4.9%. Furthermore, in the broader picture, Pepe coin has made substantial gains over the past month, boasting a remarkable surge of 37.9%. These developments underscore the coin's potential and the intrigue it has generated within the cryptocurrency community. It is important to bear in mind, however, that the cryptocurrency landscape is marked by its inherent volatility, and the figures presented here may have undergone further changes by the time you engage with this information. Stay tuned for more insights into the dynamic world of digital assets. It's paramount to acknowledge that while Pepe coin exhibits significant promise, it carries a higher degree of risk in comparison to its competitors, such as Shiba Inu and Dogecoin. This elevated risk factor primarily stems from Pepe coin's limited utility beyond its status as a meme coin. Investors typically gravitate towards projects like Pepe with the expectation of reaping quick profits. Although the higher risk quotient is an inherent characteristic of Pepe coin, it also opens the door to the potential for more substantial rewards. In essence, the risk-reward balance in the case of Pepe coin leans towards the possibility of experiencing significant price surges. Now, let's shift our focus to the central theme of today's video. The anticipation surrounding the potential approval of a spot Bitcoin exchange-traded fund, ETF, by the U.S. Securities and Exchange Commission, SEC, has captured the attention of the cryptocurrency community. In this context, the esteemed crypto research firm, Galaxy Digital, has undertaken the task of providing profound insights into the expected ramifications of the introduction of a spot Bitcoin ETF, both on Bitcoin itself and the broader ETF market. This development bears significant implications for the entire digital asset ecosystem. Galaxy Digital's comprehensive analysis highlights that the successful adoption and expansion of a US Bitcoin exchange-traded fund, ETF, hinge significantly upon how diverse wealth channels choose to incorporate this financial instrument into their portfolios. Their projections indicate distinct patterns across various categories of financial professionals. For instance, registered investment advisors are envisioned to be the vanguards of early adoption, with an initial uptake of 50% in the first year, a figure that is poised to double, reaching full-scale adoption at 100% within the third year. This indicates a swift and robust embrace of the Bitcoin ETF by this segment of the financial industry. In contrast, the adoption trajectory for broker-dealers and bank channels appears to be a bit more measured. These channels are anticipated to commence their engagement with the Bitcoin ETF at a lower rate, commencing at 25% during the initial year. However, they are predicted to gradually increase their engagement, reaching a significant 75% adoption rate by the third year. This gradual integration signifies a more cautious and steady approach by these segments. Should these adoption rates materialize as Galaxy Digital has projected, the potential market size of the US Bitcoin ETF could witness remarkable growth. The estimations paint an impressive picture. The market size could reach a substantial $14 trillion within the first year of its introduction, subsequently surging to an impressive $26 trillion in the second year, and ultimately reaching a staggering $39 trillion by the third year. These projections, while highly promising, are not immune to external factors that may influence their realization. Factors such as potential delays or denials in the approval process for the Bitcoin ETF could sway the figures. Additionally, market conditions and the performance of the ETF could also affect the rate of adoption by these wealth channels. Thus, while the future is undoubtedly bright, it remains essential to monitor these developments with a discerning eye. When it comes to the anticipated capital inflows into the Bitcoin ETF, Galaxy Digital's projections unveil a compelling narrative. According to their research, the Bitcoin ETF could potentially attract substantial inflows in the first few years after its introduction. In the maiden year, Galaxy Digital envisions that the funds allocated to the Bitcoin ETF could reach a noteworthy sum of $14 billion. This would signify a robust endorsement of this innovative financial instrument, reflecting investor enthusiasm and a burgeoning appetite for digital assets. The second year following the ETF's launch is anticipated to witness an even more substantial influx of capital. It is projected that the inflows into the Bitcoin ETF could escalate to an impressive $27 billion. This figure demonstrates an escalating interest in this investment vehicle and corroborates its potential to serve as a pivotal asset within the financial landscape. As we progress to the third year after its introduction, the Bitcoin ETF is poised to reach the zenith of its capital inflows. Galaxy Digital forecasts that the cumulative funds channeled into this ETF could reach an astounding $39 billion. This surge in investment portrays a maturing marketplace, where investors are increasingly recognizing the value and stability that the Bitcoin ETF can offer to their portfolios. Nevertheless, it is imperative to acknowledge that several dynamic factors could impact the realization of these projections. Notably, the potential delay or outright denial of the ETF's approval by regulatory bodies could exert a significant influence on the estimates. Furthermore, the performance of the ETF in terms of its price could also shape the pace of adoption by investors. A subpar performance might result in a more gradual adoption rate as investors cautiously evaluate its potential. In sum, while the outlook for the Bitcoin ETF appears promising, it is prudent to remain vigilant, as the intricate interplay of market conditions, regulatory decisions, and investor sentiment can all have substantial effects on the trajectory of this groundbreaking financial product. The potential consequences on Bitcoin's price represent a pivotal facet of this analysis. It is paramount to consider the potential impact of capital inflows into the Bitcoin ETF on the broader cryptocurrency market. Galaxy Digital's research furnishes a comprehensive outlook on this aspect, making it a vital focal point. In the scenario where an anticipated $14 trillion of capital pours into these funds during the inaugural year following their launch, Galaxy Digital's prognosis is nothing short of noteworthy. They forecast that such a surge in investment could propel Bitcoin's price to escalate by a formidable 74.1% within that year. This surge in value would signify a substantial boost in Bitcoin's overall worth, evoking interest and attention across the financial landscape. The potential for such a surge in Bitcoin's value reverberates throughout the cryptocurrency ecosystem. Notably, it lays the groundwork for meme coins like Pepe to embark on a trajectory of remarkable price appreciation, with the possibility of surpassing a staggering 1,000% surge in value. This cascading effect underscores the intricate interplay between Bitcoin's performance and its impact on the broader spectrum of digital assets, revealing the interconnectedness of the crypto market. However, it is essential to underscore that the realization of these predictions is subject to a complex interplay of factors. Potential regulatory decisions, market dynamics, and the precise influx of capital into the Bitcoin ETF are just a few of the variables that could influence the actual outcomes. Therefore, while the forecast is indeed compelling, a vigilant approach to monitoring these developments is warranted, as the cryptocurrency arena continues to evolve in real time. In conclusion, the crypto market is brimming with exciting developments and opportunities. Staying informed about the latest news and trends is essential for anyone involved in the crypto space. If you want to explore more about the top 5 AI-based cryptocurrencies to invest in, consider watching the video linked on the screen. Thanks for joining us on this enlightening journey through the crypto landscape. We've uncovered the potential influence of a US Bitcoin ETF on Bitcoin's price, and how this, in turn, can ignite substantial price surges in meme coins. As always, the world of cryptocurrency is ever evolving, and it's crucial to stay informed and vigilant. If you found this video informative, don't forget to like and subscribe for more in-depth insights into the dynamic realm of digital assets. Until next time, keep exploring, stay curious, and make informed choices in your crypto ventures. See you in the next video.